Hey everybody, Boris, welcome to the weekly technicals for Aussie dollar, dollar CAD, Kiwi dollar, the COM dollar complex for October 10th to October 14th, 2016. So the COM dollar story I think is kind of interesting because there's actually relative weakness as we enter the end of the week. What I mean by that is that while both the yen and the euro strengthened against the dollar post NFPs, the Aussie and the Kiwi and the Loonie actually took a dive. And that suggested to me possibly that the carry trade is really starting to unwind. The CAD is, of course, a separate story, and it had a nice big run off the move in the oil, but it seems to have just kind of capped out here at the $50 barrel on the oil, and dollar CAD itself really is, interestingly enough, knocking on the 133 door. So we'll get to that in just one second. But I think that the stronger, more interesting story as far as the high yielders goes is the fact that there is growing consensus in the marketplace that the yields in the U.S. have finally bottomed. The yields in the U.S. are on their way up, and that, of course, necessitates a carry trade liquidation, or at least an unwind in the near term. There's nothing on the calendar this week that is really of any great import on the commodity side. On the US side, we have consumer confidence, we have Chinese trade data, we have just literally very, very peripheral type of data sets, so nothing is going to be triggering off of the economic points of view. But I think the yield story is what we're really going to have to keep our eyes on as the week progresses. The ranges, oops, I actually just made a mistake here. I realized I need to add another zero. The ranges in the COM dollars have started to move down, and that's a critical thing when you take a look at the charts here. What you see is that the tops now are a little lower, the bottoms are a little lower as well, so we kind of edged down to 77, 74 on the Aussie. We edged up 130, 133 on the CAD, again, same story, but just the other way, and edge down again to 73, 71 on the Kiwi. Let's take a look at the charts just here and sort of examine this in more detail. But let's start with the Aussie. But you can see, I think, technically, what is happening is a slow but discernible downtrend here. We have a series of lower highs, a failure at 75, of course, then a failure right underneath 77.50, and then finally a failure at 77 as a next big move. There is some support here at this 75.50 level, and that's a key support level. But I think if that goes, if we sort of touch the 75s, it really opens up the much deeper test of the support of the 74.50, 75s, a more distributive pattern. There's no doubt in my mind, I think, that the Aussie is starting to look more distributive here as we go. And it certainly opens up the possibility for a Aussie for a cross weakness trade. In other words, selling Aussie perhaps against the euro, perhaps even against the yen on the downside. Because the one thing that I think is starting to come out very clearly here is that the carry trade is starting to unwind as we go forward. Now, dollar CAD, of course, its own animal. But what's interesting about the dollar CAD here is, despite really, really good employment data, I mean, much better than we expected, the Canadian dollar actually suffered a very big decline here on Friday, and dollar CAD had a huge move up. This is very bullish. To me, the fact that we broke out above this 32.50 support, and the fact that we had a bullish move on what is effectively bullish Canadian news, which is bearish dollar news, is suggestive that we go higher. And in fact, it's very likely now. Let me just sort of go to the weekly chart to give us a better view, that we now look like ready to go to challenge the 34s and ultimately possibly even the 35 level. This is a very bullish weekly candle as well, because it's completely engulfing of the week prior. And in fact, if I'm looking at this trade, I really honestly I have to like this trade as the single best pro dollar trade, or sort of I like the caddy as the weakest currency against the dollar right now. And I like this breakout trade, and I think that there's a strong potential here for us to see maybe 34, especially, and this is really, really important, if we start to see the oil markets begin to decline and take a little bit of profit taking. This is a big breakout. I like this move, and I think ultimately on the charts, this is probably the cleanest and strongest signal for a pro dollar move on the currency. Now, Kiwi dollar, on the other hand, I think is actually holding its ground. The 71 was the support that got tested. On a relative basis, Kiwi, I think it actually is probably going to be stronger because it's coming into this key support level, and it still has the higher yield. And it doesn't look like the RBNZ is going to do anything but just stay on path to do one more rate cut before sort of stopping its easing policy. So Kiwi looks mildly stronger against both of the other calm dollars, and certainly against the CAD. And that may be another interesting trade to take a look at. Having said this, though, it's certainly very vulnerable to a test of 7100s. It's just relatively stronger, not necessarily stronger in the absolute sense of the word. The 74 was a clear double top failure here, and now the only thing that looks relatively okay technically is that we tested the 71s, and maybe we have a move to a test of 72s, 7250s before that particular rally runs out. Generally, I like the Kiwi on a relative basis against both the Aussie and the CAD as the week progresses, or just on technical grounds alone. There's nothing fundamentally that favors us one over the other, but of course the fact that the Kiwi has the highest yield still in the industrialized world kind of protects it against the dollar a little bit more than all the other currencies on the calm dollar complex. So that's kind of how we shape up. I think the most important thing, as I said, vis-a-vis the calm dollars this week is to watch the US 10-year yields and see how those perform. Because if those begin to percolate and move towards the 180 basis, that's going to hurt the calm dollars more than any of the other pairs as we go forward. Wish you guys the best of luck, the best of trading. Boris, over and out.